Final course wrap-up. Professional integration and moving forward, in 2026 you are now ahead of the market. This course began with a simple but significant reality. Beginning March 1, 2026, certain residential real estate transactions involving legal entities and non-institutional financing will require federal reporting to FinCEN under the authority of the Bank Secrecy Act, 31 U.S.C., paragraph 5311 et CQ. What may have initially sounded complex is now structured, logical, and operational. You have moved from uncertainty to clarity. You understand the purpose behind the rule, the anti-money laundering framework that supports it, and how it fits within the broader federal transparency movement under 31 U.S.C. Paragraph 5336, the Corporate Transparency Act. You understand that this rule is not random. It is part of a nationwide effort to reduce anonymity in high-value financial systems. Real estate, long viewed as one of the final major asset classes without consistent transaction-level reporting, is now integrated into that framework. As an Arizona professional, you are no longer reacting to headlines. You are prepared with knowledge. You understand the trigger formula. Throughout this course, one framework remained central: covered residential property plus legal entity buyer plus no federally regulated institutional financing. When those three elements intersect, reporting may apply. This formula allows Arizona agents to assess transactions quickly and intelligently without crossing into legal interpretation. You do not need to interpret federal criminal statutes. You need to recognize patterns and coordinate early with escrow. That awareness alone places you ahead of unprepared professionals who may still be discovering these requirements at the closing table. For example, when presented with an LLC buyer purchasing a Scottsdale rental property using private capital, you now instinctively recognize potential reporting applicability. When presented with a conventional bank-financed purchase in an individual's name, you recognize the distinction. Pattern recognition is professional competence. You know the difference between formation and transaction, reporting. A major source of confusion in the industry has been the difference between entity formation reporting under the Corporate Transparency Act and transaction-based reporting under the 2026 Real Estate Reporting Rule. You now understand that CTA reporting applies at entity formation and ownership updates, while the 2026 rule applies at certain residential closings. These frameworks operate independently. Clear distinction prevents client confusion and strengthens your credibility. When an investor asks, "Didn't we already file something when we formed the LLC?" you now confidently explain the difference without hesitation. That clarity positions you as informed and prepared. You understand your lane as an Arizona licensee. You are not the filer in most transactions. Settlement agents and escrow professionals generally handle the submission of the real estate report. Your responsibilities as an Arizona licensee are governed by AAC R4 28-1101, which requires reasonable skill and care, and AAC R4 28-1103, which governs broker supervision. You must avoid misrepresentation under ARS, paragraph 32-21153, and refrain from providing structuring advice intended to avoid reporting. Staying within your lane is not limitation. It is protection. When investors ask structuring questions, you now understand that referral to legal counsel is not avoidance. It is professionalism. You recognize red flags without becoming an investigator. Arizona remains an investor-heavy state. LLC usage is normal. Cash offers are common. Private financing is frequent. None of those elements alone signal wrongdoing. However, unusual secrecy, resistance to documentation, intentional ownership manipulation, or statements about avoiding federal reporting create elevated risk. You now understand how to recognize these red flags while remaining neutral, factual, and composed. Escalation and coordination, not confrontation, is the correct response. Professionalism is not suspicion. It is structured awareness. You know how to prepare clients early. One of the most powerful tools you gained from this course is the importance of early communication. Introducing transparency expectations during the buyer consultation eliminates closing day tension. Updating brokerage policy manuals supports reasonable supervision under R428-1103. Coordinating proactively with escrow strengthens operational flow. Compliance is smoothest when it is expected rather than discovered. An investor who hears about reporting requirements on day 1 reacts calmly on day 30. An investor who hears about it at the signing table may react emotionally. Preparation prevents friction. You understand that transparency does not eliminate opportunity. Arizona's market will not disappear in 2026. Short-term rental investors will continue purchasing in Scottsdale and Phoenix. Portfolio investors will continue acquiring rental property in Mesa, Chandler, and Gilbert. Luxury buyers will continue making cash purchases in Paradise Valley. What changes is the expectation of anonymity when certain triggers exist. History shows that markets normalize regulatory evolution. FIRPTA compliance did not eliminate foreign investment. Affidavits of disclosure did not halt land sales. Transparency matures markets. Professional agents adapt. Leadership perspective. If you are a designated broker, team leader, or high-producing agent, your leadership sets tone. Offices that address this rule calmly, document training, update written policies, and maintain consistent messaging will experience minimal disruption. Offices that ignore regulatory change may create unnecessary confusion. Under ARS, paragraph 32, 153, organized operations reduce exposure. Leadership is not about fear. It is about structure. Your professional identity in 2026. In 2026 and beyond, the Arizona real estate professional who thrives will be informed, calm under regulatory change, proactive in communication, neutral in legal matters, and structured in supervision. Clients do not expect you to be a federal compliance attorney. They expect you to be competent and aware. You now meet that expectation. Final integration statement. You have completed a comprehensive 6-chapter review of the 2026 Federal Real Estate Reporting Rule, including its legal foundation, operational mechanics, Arizona supervision implications, investor red flags, brokerage implementation strategies, market impact considerations, frequently asked questions, and future outlook planning. You are prepared to recognize reporting triggers, coordinate appropriately with settlement professionals, maintain professional neutrality, and operate confidently under evolving federal transparency standards.